Good morning, students. Today we are going to start our Unit 9, that is internal trade, in which you just come to know that what is internal trade, its meaning and types in 9.1. In 9.2, you come to know that what is wholesale trade, its meaning and services, retail trade, and goods and services tax. The basic concept of GST and its key features you have to learn in this unit. Moreover, what are the learning objectives? Let's see. By doing this unit, you just come to know about each and everything about the internal trade, wholesale trade, retail trade. Retail trade is so wide because it's a lot of types are also there, and goods and services tax. By learning this unit, you come to know all this. But we are going to start our chapter number 9.1 today. The chapter 9.1 is internal trade. Its meaning and types we have to do. What is internal trade? Internal trade means whatever the trade that is done within the boundaries of a country is known as internal trade. What is internal trade? Internal trade is the trade which is to be done inside the boundaries of a country. You can see the meaning it is given over here. The internal trade that is works within the boundaries of the country. Now, the meaning is given in the toolkit. Internal trade, it refers to the buying and selling of the goods and services within the boundaries of a country. I hope it is clear to you. Trade means the buying and selling of the goods. The buying and selling is the trade. And whatever the goods and services, buying and selling, that is a trade. But whatever the business or the trade that is done within the boundaries is known as the internal trade. So I hope with the help of meaning, it is clear to you that what are the features can be. First of all, the trade that is done within the boundaries of a country is known as the internal trade. It is the most important feature of internal trade. Free movement of the goods. It is often no restriction on the sale or purchase of the goods in different states of the country. So free movement of goods is there. Dealing in local currency. Yes, as internal trade is take place in between the boundaries of a country. So no foreign currency has been used. Only the local currency has been used in internal trade. Special act to settle the disputes. In order to settle the disputes arising out of internal trade, the provision for the sales of goods are applicable. So these are the various features of internal trade. The internal trade is done within the boundaries of a country. It is the free movement of goods. It is dealing in local currency and special act to settle the disputes. Now, look at the flow chart here, the types of internal trade. The types can be defined on the basis of its relationship, on the basis of the levels, on the basis of the quantity. If I talk about the relationship, there are two types of internal trade. It is your direct trade and indirect trade. If I talk about on the basis of the levels, it will be the local level, state level, and national level. On the basis of quantity, it is wholesale trade and retail trade. One by one, we will look every aspect of internal trade on the basis of relationship. On the basis of relationship, relationship means between various parties. There are various parties, you know, that take place, like the wholesaler is there, retailer is there, agents are there, customer is there, producer is there. So many parties, so many persons involved in every business transaction. Selling and buying always take place between two people. If one is selling, another is buying. And there are so many channels in between them as well. So on the basis of that, if the producer and the customer has a direct relationship, there is no mediator, then it is known as the direct trade. See, producer is there, wholesaler is there, retailer is there, and consumer is there. Where it is often has been observed there are certain mediator in the internal trade. For example, the producer goods to wholesale and wholesale sell goods to retailer, and then it's reached to consumer. But instead of this, you can see it is given in the next flow chart. If the producer direct deal with the consumer, if the producer directly deal with the consumer, then it is known as the direct trade. So what is direct trade? On the basis of relationship. If any producer and consumer has a direct relationship, then they have the direct trade. Now see, what are the advantages of direct trade? No artificial scarcity of the goods. When the goods are sold through mediators, sometimes they stock the goods. They create an artificial scarcity. In the way, they earn the undesirable profit. In the direct trade, the possibility of the artificial scarcity of the goods is almost non-existent. Then, receipt of the original goods by the customer. The consumer receives the original goods from the producer, because as the producer produces, it is provided to the consumer. So there is no possibility of the adulteration, because presence of the mediator is reduced here, or it is all about nothing. Double profit to producer. Yes, as there is a direct relationship, no agents are there. So at all the stages, he has to sell the goods to the customer. So no mediator are there. It means he will earn the complete profit. Availability of the goods at the lower price to the consumer. The producer add their profit to their price of goods at the sale stage, but this is less than one added by the mediator. Therefore, the consumer get the goods at the lower price. So availability of the goods at the lower price to the consumer is just happen because of direct trade. Benefit of cash sales to producer. Under the direct trade, the sales are mostly done in cash. The producer is saved from the trouble of blocking the money in the credit transaction, because the agents, the retailer, wholesaler usually demand for the credit transaction. But the customer usually who is just buying the goods, you find you may have the business transaction in cash only. So it is very easy to convert everything into cash. And if we talk about the indirect trade, it is a kind of trade in which producer take help the mediator in order to make the goods available to the consumer. There are three methods of internal trade. Through the wholesaler, they can do through the wholesaler. Wholesaler means the producer sells its goods to the wholesaler, and wholesaler trade sells the goods to the retailer, who later on sells them to the consumer. See, in the flow chart you can see when the wholesaler is there, then through wholesaler we may have the, through retailer we may have the, in which wholesaler will not be there, only retailer will be there. Then it is known as the indirect trade. So through the agents as well. Sometimes the wholesaler and retailer are not there. Instead of that, agents are take place in between producer and consumer. Then it is known as the indirect trade. So we have done on the basis of relationship two type of trade. One is direct trade, another is indirect trade. If I talk about the direct trade, it means when the relationship take place between the producer and the consumer directly from each other, then it is the direct trade. And indirect trade in which the wholesaler is there, then retailer is attached to wholesaler, then consumer is there. If you talk about the retailer, wholesaler will not be there, producer, retailer, then consumer. And if we talk about the agents, no wholesaler, no retailer will be there. Agents take place between consumer and producer. So on these bases, we can say, we can define the various types of internal trade on the basis of their relationship. Now, on the basis of the levels, internal trade can be divided in between three parts on the basis of levels, that is your local level trade, state level trade, and national level trade. On the basis of local level trade, it remains confined to some village or a district. The trade usually deals in preliminary and goods of daily use. Like in your areas, you find the local sweet shops are there, local fruit shops are there, you find each local milk dairies are there. So these are the shops or the trading organizations which just confined to that particular village or the district, that local area. Some of the trade organization which carried their business in the various district of the state, that's it known as the state level trade, like the trade of the grains, pulses, utensils, etc. If we talk about the national level trade, the trade is carried into various states of a country, that is called the national level trade. This trade is usually carried on chiefly in sugar, cloth and machinery. So on the basis of levels, there are three types. On the basis of quantity, if we talk, there are two types of trade. If they deal or trading the goods in the huge quantity from the producer, then sell them to the small quantity to the retailer, then wholesale trade is carried in one type of goods. And if we talk about the retail trade, a retailer purchases different kind of goods from the different wholesaler and he sell the goods in the small quantity to meet the demands of the consumer, then he is known as the retail trade. So on the basis of quantity, there are two types of trade. Let's recall what are the types of trade we have done till the time. We have done the types of internal trade. On the basis of relationship, it is direct and indirect. On the basis of level, it is a local level, state level and national level. On the basis of quantity, it is a wholesale trade and retail trade. Now the question arises, what are the documents are to be required in internal trade? There are various documents that are to be used, and as a business point of view, as you are studying the business study, it is very much clear to you that what are the documents are to be used in various internal trades. First of all, invoice. For the credit purchase, whatever the statement is to be prepared for the supply of the goods by the seller to the producer is known as invoice. Please underline, please highlight, for the credit purchase, whatever the statement is prepared for the supply and all the detail of the particular, all the address of the seller name is there, what are the goods purchased, quantity of the goods, quality of the goods, rate of the goods, total value of the goods, sale tax, trade discount, all the details about the transaction is to be recorded in an invoice. Moreover, this is also known as bill or memo. Recording of purchase book is made on the basis of these documents and the source document of the transaction when the recording is made in purchase book from the invoice. And then the invoice, a tick mark is made and is filled. Second, pro forma invoice. The statement or a forwarding letter contains the detail of the goods consigned from the consignor to consignee is known as pro forma invoice. It gives the particulars related to the quantity, whatever is consigned to them. As the consignment is not sold and the consignee is not the buyer, therefore forwarding letter is sent along with the information. They are the caretaker of those goods. They are not the buyer and seller. They are the agencies or the organization who are taking care of that. That's why interim invoice is to be prepared, and it is also known as the pro forma invoice as it contains the complete details about the goods are to be consigned. Debit note. It's a letter or the note which is sent by the buyer to the seller, stating that the account has been debited by mentioned amount of the account of goods returned herewith. It states the quantity, rate, value, reasons of the return of the goods. 2 copies of debit note are prepared, out of which one is sent to the seller for the information, and that is his account has been debited, said the amount, and the second copy is kept by the office for the future reference. Credit note. It refers to the letter or the note which is sent by the seller to the buyer, stating that his amount has been credited by the mentioned amount on the amount of acceptance of his claim about the goods returned by him. Credit note is prepared in duplicate. 1 copy is sent to the buyer and 1 is kept in the office. Lorry receipt. It refers to the receipt issued by the transport company for the goods accepted by and for sending from one place to another. This is also known as the transport receipt or also known as BILT. Please don't forget to mark. You may get the 1 mark question that what is BILT? RR, railway receipts. Suppose if you have the goods through railway, so one receipt is to be issued by the railway for the goods accepted by its sending from one station to another station, that is known as RR. So what are the documents are to be used in internal trade? That can be invoice. Performa invoice can be there, credit note, debit note, lorry receipt and railway receipts. Now, some terms are used in trade and it conveys some particular meaning. What are these terms? One is cash on delivery, that is COD. COD refers to its type of transaction in which payment of goods and services are to be made at the time of delivery. If the buyer is unable to make the payment when the goods and services are delivered, then it will be returned to the seller. Payment can be made in the form of cash or DD or money order. So it is known as COD, cash on delivery. Nowadays, students do a lot of, our youngsters do online transaction in which COD is also there. When you use Zomato as well, you also find the COD option is there, means cash on delivery. When you get the food at your place, then you will deliver cash to them. Or sometimes you can pay through the debit or the credit card also, ATM card. Free on board or free on rail, that is FOB or FOR. You may get the short forms as well and you have to write the full-fledged form of these abbreviations. You may get the question like this in the paper as well, that what is FOB? Write the full form of FOB. So don't forget to write free on board or free on rail. This is a contract between the seller and the buyer in which all the expenses up to the point of delivery to carry. It may be the ship, it may be the rail, it may be the lorry, are borne by the seller. The ownership of these goods passes from the seller to the buyer upon the delivery by the former to carrier. Then the carrier acts as an agent of the buyer. CIF, that is your cost, insurance and freight. It refers to the term to be used in the trade transaction in which the price of goods includes not only the cost of goods but also the insurance and freight charges payable on the goods. E and OE, error and omission expected. If you notice down and observe, many times at the last of the bill or your, you may have your fees receipts with you. You also seen at the end in the corner E and OE is mentioned there. That is your error and omission accepted. It refers to the term which is used in trade document to say that mistakes and things that have been forgotten should be taken into account. This term is used in an attempt of the legal liability for incorrect or incomplete information supplied in a document such as price list, invoice, cash memo, quotation, etc. In all these you contain this. In invoice you contain this information, in cash memo, in quotation you may have, in price list also, that is E and OE. So what we have done today in the chapter number 9.1 of unit 9, we did the internal trade today. We just come to know that what is the meaning of internal trade, what are its features, what are the various types on the basis of various bases, like on the basis of relationship, on the basis of levels, on the basis of quantity. So on the basis of relationship, we just come to know direct trade and indirect trade. On the basis of levels, local level and state level and national level is there. On the basis of quantity, wholesale trade and retail trade is there. So in this way, we just come to know that what are the various types of the local trade. Now the main documents used in internal trade. These are invoice, performa invoice, debit note, credit note, lorry receipt and railway receipts. And the basic terminology that is used in the trade are COD, it is FOB, FOR, CIF, E and OE. You have to learn each and every transaction, each and every basic concept of the chapter, prepare proper notes of these, learn it so well, and then we will move ahead tomorrow with the starting of new chapter 9.2. Thank you. Have a nice day.